Welcome to SRI's Executive Overview on Corporate Social Responsibility. We're glad you can join us today, and we hope you find this helpful wherever you are on your CSR journey. SRI started seeing CSR questions and issues emerging from our clients about a year ago, so we ramped up our own efforts with CSR internally as a member of your supply chain, and in our commitment to be a full-service provider of CSR and sustainability solutions. Just like you, we've been working in the space for years. SRI began its commitment to CSR in 2008 when it launched 3 initiatives that would grow to be the backbone of its current CSR practice. First, we wanted to be a best place to work and use outside, independent verification to demonstrate our performance. In fact, we were actually named a best place to work in Pennsylvania. Second, we made a commitment to establishing and assessing the sustainability of built environments. Our team has actually evaluated more than 8,000 LEED project phases around the world. And third, we expanded our services to include those standards that protect our environment, communities, and people. We've added ISO standards such as environmental management, health and safety, energy management, and most recently, social accountability and CSR assurance. For SRI, CSR was a great way to bring it all together internally and for our clients, and identified some additional opportunities for us to create value. SRI made a commitment to the UN Global Compact, and we started to develop our own CSR strategy and plan, which will be shared later this summer. We're using a management system approach that builds the CSR commitments and requirements from the relevant frameworks into our accredited ISO 17021 management system. We will produce our first CSR report later this year, and we're in the process of applying for B Corp certification, which is considered a gold standard for demonstrating commitment to CSR. We are truly walking the walk. We've invested a lot of time and resources in CSR since we started in 2008, and we've learned a lot about CSR on our own journey. So we created the material for this webinar to help our clients, wherever you may be on your journey, to see how the pieces fit together and what you can do to get the most value from CSR. You're doing a lot of great things, and you should get credit for it. This webinar will provide an executive level overview of CSR, also known as ESG or sustainability, and will focus on what you need to know to ensure your organization is not only protected from CSR risks, but positioned to take advantage of CSR-related opportunities. We see this as the first in a series of webinars, which will dive deeper into particular aspects of sustainability, such as supply chain, as well as offering our insights on CSR opportunities in some of the key industries in which our clients operate. So my name is Jana Lake, and I am SRI's Chief Sustainability Officer and CSR Solutions Lead. My background is in consulting, and I've worked on CSR-related issues for more than 20 years in large and small corporations, in communities, and exploring the opportunity to make buildings more sustainable, both to improve the health and productivity of employees and reduce their environmental impact. I've spent the last year dedicated to a deep dive in all things CSR, the frameworks, reporting, assurance, etc., so I can bring that knowledge to SRI's clients. As Chief Sustainability Officer, I'm leading SRI's efforts to define and communicate its own CSR strategy and plan. And as CSR Solutions Lead, I'm working across SRI to help our clients address their CSR needs, both on the audit, assessment, and assurance side, and also on the strategy and planning side with 3R, which is a wholly owned division of SRI, offering CSR and built environment consulting services. To make sure you are best positioned to proactively address CSR issues in your company, we've tried to answer some of the questions you may have. First, what is CSR and why is it important to my company? We're going to talk here about the value of CSR to your business, CSR risks and opportunities, and the latest trends in CSR. The second question you might have is, what is sustainability and CSR management, and how will I know if I'm doing it well? Here we will discuss the main CSR frameworks, how the various sustainability standards fit together, CSR reporting and legislation, and the value of assurance. And finally, you're probably thinking, how do I get started? And here we'll discuss steps to define your CSR strategy and resources to help you get started. So let's start with what is CSR and why is it important to my company? The first thing we want to do is define what we mean by CSR, or corporate social responsibility. CSR is also known as sustainability. ESG is the most common term heard in the investor world. It stands for environmental, social, and governance. And even corporate resilience, all about the sustainability of your business and its ability to last over the long term. CSR is really about accountability and transparency. Accountability to your business and your stakeholders, and transparency in those things that are material to your business, your largest impacts and issues. It is not enough to maintain your operations. You want a business that survives and thrives. That's what we mean by business sustainability. Businesses also have a responsibility to contribute to sustainable development and address global causes for concern. Key stakeholders are increasingly requiring it. And this picture shows how the pieces fit together. You want to have a business with good organizational governance, which sits within a society with goals for social equality, and an environment that thrives on healthy ecosystems. Together, this is often referred to as the triple bottom line. There are many reasons companies are incorporating CSR into their management systems, because they see the business value in doing it. Many start from a risk management or legal compliance standpoint, but they start to see the value in improving their business performance, and they start to see reduced costs, they begin to explore new opportunities, and they see an enhanced opportunity to increase their brand reputation. Companies realize the value of taking care of their resources, natural resources, and reducing the impact on the environment, and human resources, both from the health and productivity, as well as being able to recruit and retain the right talent. And corporate citizenship is about looking beyond the four walls of a company and thinking about the impact the company has on the community, the environment, and their other stakeholders, then taking action to be a good corporate citizen. Companies are under a lot of pressure from various stakeholders. Stakeholders want transparency first, then performance. They will give you a lot of credit for identifying the issues you need to address, making a commitment, and being transparent about what you are doing. If we start at the top, customers are requiring their suppliers to provide sustainability information, from surveys to code of conduct audits, and even meeting specific standards, such as ISO 14001 environmental certification or SA 8000 social accountability. Walmart, IBM, Johnson Controls, even the US Postal Service, just to name a few. Now let's look at employees. A 2016 Cone Communications employee engagement study shows that 58% of all employees consider a company's social and environmental commitments when deciding where to work. For millennials, that number jumps to 79%. When it comes to consumers, a 2017 Cone CSR study found that 55% bought a product with a social and/or environmental benefit. 50% of consumers boycotted or refused to purchase a company's products or services upon learning that it had behaved irresponsibly. And 39% researched a company's business practices or support of social and environmental issues. Activists and community groups are becoming increasingly vocal about the impact companies make in their communities and with the environment. A wise company will engage them before an issue arises or immediately upon identifying an issue and work closely with them to resolve it. Companies who try to discredit or block them end up suffering at the hands of social media and can take a real hit to their brand. Boards of directors are taking a more active role in managing sustainability. This is a really good thing. They need to feel the ownership and accountability and can become strong ambassadors for the programs you're trying to put in place. Investors look at ratings from Bloomberg and others who use data that is either provided to them or they have analysts sort through publicly available data to rate a company on their ESG performance. There has been a move toward responsible investment, which has grown tremendously in the past few years. Think of BlackRock's statement. They're expecting public companies to demonstrate a longer-term vision and show how they are impacting society. It's no longer just about the quarterly earnings. The UN Principles for Responsible Investment has more than 1,400 signatories, representing $54 trillion in assets under management. In fact, MSCI found that companies with higher ESG ratings had higher average return on invested capital and were valued at a premium compared to companies with lower ESG ratings. But companies who are not transparent about their CSR efforts sometimes end up with low scores on these investor ratings simply because they have not made the information public. Just pulling together what you are doing and communicating it can go a long way as a first step. Governments are taking a role as well. The EU Directive on Reporting we'll talk about a little bit more in a few minutes. But there are also regulations at the local, community, state, and country level, especially in India and China. Even California's new regulation about solar panels are required on new homes. Industry associations are playing a role as well. AIAG's Global Automotive Sustainability Guiding Principles address expectations of automotive companies towards suppliers on sustainability issues. The Electronic Industry Citizenship Coalition defined a code of conduct for social responsibility which applies to the 100+ member companies and their suppliers worldwide. The World Economic Forum published their Global Risks Report for 2018. In it, they identified the 5 greatest risks based on likelihood and the 5 greatest risks based on potential impact. In the last 10 years, this list has gone from being more heavily weighted to economic and geopolitical issues, whereas now it is dominated by environmental and technological risks. On the right-hand side, you'll see that KPMG predicts the sustainability risks for corporations looking out the next 10 years. The risks that top the list are climate change, energy and fuel, and resource and water scarcity. The World Business Council on Sustainable Development and COSO work together to provide some guidance on how to address ESG issues in enterprise risk management. They identified some of the key ESG and CSR issues and some risks and opportunities within each. This list is not exhaustive, but gives you an idea of how global these issues are and how some of these megatrends translate into operational issues you may face. It also demonstrates that sometimes risks can be turned into opportunities by putting some additional attention and focus to it. If we look at just a few here, there's some that you probably recognize in your business as well. The environmental side, some of the issues are around energy use and efficiency, climate change impacts, and using ecosystems. On the risk side, you certainly have a risk if you have higher than average energy costs resulting in missed profit targets. And on the opportunity side, if you put internal carbon pricing scheme in, you may be able to manage and reduce your greenhouse gas emissions and energy costs. On the social side, there are issues around employee engagement, labor conditions in the supply chain, and poverty and community impacts. A risk here would potentially be low engagement and high turnover, resulting in increased costs and missed profit targets. But the opportunity is greater loyalty and inclusive workforce attract the best talent in the industry. And then on the governance side, there may be issues around code of conduct and business principles, accountability, and transparency and disclosures. A risk here would be limited board oversight resulting in negative company performance, An opportunity is having open and transparent board decisions for key ESG-related topics, which provide investors with a greater sense of security in their investments, leading to increased and longer equity positions. We've touched on a few of the issues within the ESG categories. Here's a more complete list, but not yet exhausted. This one incorporates the GRI disclosures, ISO 26000, and a variety of other frameworks, but it's still not complete. It is also important to point out that stakeholders are expecting you to not only address the impacts within your company's four walls, but also your supply chain and even looking downstream to the impacts from the use and disposal of your products. In other words, your entire value chain. By now you've likely heard of the circular economy. This captures the idea that companies are beginning to take responsibility for their entire value chain. This picture represents an example from an automotive company, starting with research and development, through procurement from their supply chain, production, transportation, sales and use of the vehicle, and finally disposal, or ideally some type of reuse and recycling of component parts to put back into the value chain for future cars or another purpose. You've probably also started to hear about Scope 1 through 3. This picture is for emissions, but the concept is the same for any type of impact. It explains what is included in each scope and makes the point that companies must be aware and try to influence not only what is in their four walls of direct control, but also what happens in their supply chain before something gets to the company and what happens further down the value chain once a product leaves their doors. This applies to not only emissions and environmental impacts, but social impacts as well, such as making sure there isn't use of child labor in the supply chain and trying to encourage reuse of products. For example, what Levi's is doing now with their jeans in emphasizing repair and reuse. Developing countries are often hubs for operational processes. Working across borders brings a number of challenges: cultural, legal, language, political. Developing countries also may lack rigor in their legislative commitments to protecting human rights or the environment. These issues have been going on for a long time. Nike was publicly accused of using child labor in offshore factories back in the 90s. This criticism endured until '98 when Nike's CEO announced significant long-term measures to improve working conditions at supplier factories, but this caused long-term damage to their reputation and brand. Mattel was forced to recall $100 million worth of product when one supplier used lead-contaminated paint on the company's toys in 2007. Volkswagen recalled millions of cars after admitting to falsifying emissions tests, which resulted in a $14.7 billion settlement. And the automotive industry was hit hard in 2011 due to flooding in Thailand that resulted in over 500 deaths and significant disruptions to the supply chain network. Uber has faced a number of issues in the past year or so. A new CEO came in a few months ago, and now there's an advertising campaign all about accountability and transparency. On the bright side, sometimes accountability and transparency can result in some good things happening and changing an industry. In 2015, an NGO called Forest Ethics alleged that 3M suppliers provided products from endangered forests around the world. That led 3M to revise its policy on pulp and paper sourcing to improve environmental and social practices in more than 70 countries with 5,000 suppliers. So brands are starting to set standards for the sustainability commitments they expect of their suppliers. This not only manages their risks and exposure, but can also identify opportunities for operational efficiency and improve the lives of their workers and surrounding communities. So now that we've talked about why CSR is important to your business, let's spend a little time talking about how companies manage their CSR and sustainability issues and impacts. When done well, CSR is built into your management systems, and it's a nice complement to any other standards and systems you may have in place. It is not an add-on. It is built into how you manage your business. Effective sustainability management has all of the pieces you would expect to see: governance, policies, procedures, key performance indicators that a business uses to make decisions and management performance on issues. All of these things to manage the issues that are material to the business and its stakeholders. To do this well, companies will first engage with their stakeholders. Second, determine the material sustainability topics based on the issues and impacts that are most important to the stakeholders and the business. Third, set goals for these topics, put a plan in place to take action, and communicate their progress. And fourth, measure the impacts and be accountable for the results. Companies are at different points along this CSR maturity model. If you start on the left, the first thing you'll note is that compliance is below the line. Compliance is not CSR. It's a legal requirement. Corporate social responsibility is all of the stuff you do above the line. Compliance just gives you the license to do business. Sometimes companies think CSR is about philanthropy. Donating money to support causes that mean something is a wonderful thing, and many companies have started to form foundations for just this sort of thing. But that's not really what we're talking about with CSR. We've seen that companies start getting into CSR to meet some stakeholder need. Maybe they want to do the right thing for their employees, or a customer requires them to provide a specific policy on sustainability, or maybe they get a low investor rating on ESG, so they decide they need to do something, but they're still very much in reactive mode. As companies become a little more familiar with CSR and the value it can provide, they might start looking at their triple bottom line and start to think about sustainability as not just a cost, but worth the cost. They may set some incremental goals, and they might even create a CSR or sustainability strategy and plan. As companies become well versed in CSR and start to realize the value, they will start taking a longer term view. Think Unilever here as an example, and start talking about the purpose of the company. Here, CSR is truly built into their management systems, from strategy and governance right through to every part of the organization. They've moved past risk management and they're pursuing opportunities. Now they are in a proactive mode. They may align their actions to the UN Sustainable Development Goals, and they may set aggressive, maybe even science-based goals. At this point, CSR is integrated into their corporate strategy. They provide reports on their progress, likely in line with GRI or maybe even integrated financial and non-financial reporting, and they likely have third-party external assurance of their systems and report data. We've touched on a few of these CSR business case and value drivers before, but let me just highlight a few here. If done well, CSR can certainly help you improve stakeholder relations and trust, leading to increased brand reputation. It helps with talent attraction and retention, differentiating markets and sales, innovation in new products and services, better risk management, increased productivity, breaking down corporate silos across functions and getting them all working well together, lower operating costs, improved access to capital and lower insurance premiums, and all of these things can lead to increasing shareholder value. In fact, research suggests that strong corporate performance on CSR issues correlates positively with improved cost of capital and financial performance. So there are a lot of good reasons to do CSR, but we know it's not easy. There are a lot of frameworks and standards to consider. It can be difficult to get the information you need internally and from your suppliers. It helps to have strong leadership internally supporting those efforts. It may require some internal training and change management so that everyone can see the value that you see. And frankly, you have a lot on your plate, and there's never enough time or resources to get it all done. So here's the point. You're doing a lot of great things, but without an overarching strategy and plan, you're forced to react to supplier requests for a particular policy or data point. Having a CSR strategy and plan allows you to move from being reactive to proactive because you can provide the information you have identified is most important to your business and your stakeholders. You're not expected to do all of the frameworks and all of the standards. You just need to identify those things that are most important to your business and your stakeholders and focus on getting those things right. Maximize your positive impacts and minimize your negatives. Continue to do the great things for your employees. They're your most valuable asset and will give you the greatest return. But if you know you have some type of environmental or other impact in your value chain, do what you can to minimize or offset it. The next few slides demonstrate what you already know. There are a lot of frameworks, sometimes overlapping, and so you'll need to figure out what is most relevant to you. There's the AA 1000 Stakeholder Engagement Framework, which covers the whole gamut. You have the Sarbanes-Oxley, which starts to address some of the financial and economic needs. UN Global Compact, which is a very policy-driven document around social, ethical, and environmental issues. That leads you into the UN Sustainable Development Goals, which starts to build on a number of different measures to help us get to a sustainable world. In the reporting space, there's GRI, Integrated Reporting, and SASB. There are the DJSI and other investor ratings. There are the individual component pieces, such as ISO 14001, which is a standard for environmental management. And there's SA 8000, which deals with social accountability. There are the UN norms that cover all of the different social and ethical ways of operating around the world. And there's the AA 1000 Assurance Standard, which looks at how CSR is built into your management system from an assurance and reporting perspective. And that's just the start. Next, we start getting into some of the other investor and supplier ratings, other ISO standards for pieces of the CSR picture, other types of customer requests like surveys and code of conduct audits. Let me just highlight a few of the overall frameworks and reporting and assurance that may be most helpful to you. On a future call, we can get into the details of some of the other standards and rating systems, but these are some that I suspect you'll probably hear most often. There's the UN Global Compact, which represents 10 principles of operating. SRI is a proud participant in the UN Global Compact. For some companies, this is a nice first step to make a commitment to something bigger than themselves. It is very principles-based and a relatively easy first step to take. This is the world's largest CSR initiative with 13,000 corporate participants and stakeholders in over 170 countries. The UN Global Compact and its signatories are working toward the Global Sustainable Development Goals, or SDGs, which I will show you next. Signing the compact means that you adopt these sustainable and socially responsible policies and agree to report on your progress annually. In 2015, world leaders adopted the 2030 Agenda for Sustainable Development, which includes 17 Sustainable Development Goals to end poverty, fight inequality and injustice, and tackle climate change by 2030. There are 169 targets supporting these and reports full of ideas for how businesses can support the SDGs. If you want to use these in your business, once you have identified your material impacts, you can map the actions you are taking to the Sustainable Development Goals and actually report on them in your CSR report. There are a number of resources available from the UN in their SDG toolkit. Since many of you are familiar with ISO, we've included the ISO 26000 framework on CSR. It is not a standard, it is a guidance document. But as you can see, it does touch on the relevant ESG topics, and it too is very principles-based. In the reporting space, GRI is the most common framework right now for reporting. It is also principles-based. It has general disclosures that all companies must report, and then there are specific standards for disclosure on each topic area. Companies can choose if they want to only report on their material topics, which is the core option, or if they want to report on all topics, which is the comprehensive option. One other point about GRI is that companies must provide their management approach as to how the business manages its impacts. This ties in nicely with having CSR built into your management systems. Integrated reporting is about reporting financial and non-financial metrics together, and it focuses on 6 capitals: financial, manufactured, intellectual, human, social and relationship, and natural capital. Integrated reporting shows the value created over time by moving from the inputs in these areas to the outcomes. SASB started in response to investor requests for more comparable non-financial disclosures. It focuses on non-financial metrics that drive value and performance in a company and offers standards by industry to try to get to apples comparison. This is probably one of the biggest criticisms of CSR reporting to date, is that often different companies in the same industry will use different measures to track their performance, and it becomes difficult to look across industries or across companies within an industry to be able to come up with a direct comparison. Based on some work done by the Center for Sustainability and Excellence, they looked at 551 CSR reports last year, and this is what they found. First, that GRI was the most common framework used. Secondly, that about 1/3 of reports were externally assured. And an increasing number of companies are planning to report on SDGs going forward. Outside of North America, there are requirements for CSR reporting that are starting to pop up. The EU directive is required only in Europe right now, but other countries are considering moving in that direction. The EU directive says that all large companies operating in Europe with over 500 employees will be responsible for disclosing in detail information on social, labor, and environmental issues in their annual reports. But the companies can decide how they want to report that. If they want to follow a standard such as UN Global Compact, GRI, or ISO 26000, the point is just that they want them providing information on environmental matters, social and employee aspects, respect for human rights, anti-corruption and bribery issues, and diversity in their board of directors. The GRI predicts that as reporting matures, disclosures and information will become easier to get and will be more frequent. My guess is that with technology, at some point it could become real time, which would greatly change how reports are done today. Rather than an annual look back, it will become perhaps a website which gives access to searchable data for those things that you are reporting on. It's not freewheeling access to all of your internal corporate data, but just to those things that you have chosen to manage and be accountable and transparent to your stakeholders. Impact will also be quantified looking forward in the value chain to highlight the business's contribution to improving the environment, quality of life for communities, etc. Assurance is about ensuring that the right issues are being managed and reported on, and that the issues in the report are right. AA1000 is a principles-based approach to provide confidence or assurance that sustainability is built into a company's management system. It can be used with other frameworks. A company which has built CSR into its management systems can demonstrate that it adheres to the AA1000 principles. Inclusivity ensures that all relevant stakeholders are considered. Materiality ensures that the most relevant and significant topics are identified and prioritized for an appropriate response. Responsiveness ensures that the company responds to its stakeholders on material topics. And impact, which is a new principle that was just added this month, ensures that a company measures and monitors the impact that it has on the economy, the environment, society, stakeholders, even the organization itself. There are two primary types of assurance, AA1000 and ISAE 3000. SRI offers AA1000 because it is a management system approach to assurance. It can also ensure that data in the report is correct. ISAE 3000 can only be done by accounting organizations and is more so for the purpose of purely verifying the accuracy of the non-financial data in a report. In that CSE report I mentioned of the North American companies, of the 1/3 that were externally assured, about 20% were done to AA1000, 30% to ISAE, 40% to no standard at all, and 11% to some other type of standard. I know that's a lot of information to absorb, so let me repeat here something I said earlier. You are not expected to do all of the frameworks and all of the standards. You just need to identify those things that are most important to your business and your stakeholders and focus on getting those things right. Maximize your positive impacts and minimize and try to offset your negatives. So in this section, we'll give you some tips on how to take that first step to do the right thing for your business. So companies who have built CSR into their management systems will have implemented some type of methodology like this. Again, for those familiar with ISO, this will look pretty familiar. The steps of defining a CSR strategy, planning, delivering on the plan, and monitoring performance and reporting on it is very much like plan, do, check, act. When a company defines its CSR strategy, the first thing it should refer to is its corporate mission and vision, because the CSR strategy should support the mission and goals of the company. Now that said, a number of companies I have seen use this as an opportunity to refresh their mission and vision. In fact, we did this at SRI. We took the opportunity to refresh our mission and vision so that they better reflect not only the work we are doing now, but the values and vision we have for the company going forward into the future. Next, you'll look at best practice research. What are your competitors and other CSR leaders doing? What kind of metrics are they measuring? Look at the various frameworks and pick out the pieces that are most relevant to you and your business. Engage your stakeholders. Some companies already have systems in place to get customer input and feedback, might have an advisory board, or they might conduct employee surveys. This can seem daunting, but it doesn't need to be if it's structured well. And it can provide some great insight into what your stakeholders feel are the most important issues for your business to address and communicate with them on. Companies will also map their value chain to identify any other impacts, and they will prioritize the issues and impacts according to the importance of each to the stakeholders and the business. The most material ones are the ones that you will focus on in your CSR plan and report. There are many benefits of stakeholder engagement. It will help you build trust by identifying your stakeholders' expectations and making sure that you are meeting them. It helps you better manage risks and reputation. It helps you learn from your stakeholders to improve your products, services, and processes. And you will improve the sustainability of your organization. From your stakeholders, you will identify the issues that are most important to them. And then you will begin to prioritize the issues based on the importance of each to the stakeholders and to your business. And you will focus on the ones that are most important to both. So if we take an issue, as you can see on the right, and we map them according to the importance to the stakeholders compared to the importance to the business, you will focus on the ones on that outside ring, numbers 1, 2, 3, and 5, because those are most important to both. You can still manage the other ones inside the lines, but your stakeholders have already told you they're not as concerned about them. So you may choose to not communicate progress on them regularly, even if you are managing them. As companies move into planning, they focus on those items that are most material to their business. It is always helpful to do a SWOT analysis, identifying your strengths, weaknesses, opportunities, and threats in each area. This is where it is very important to start slotting in all of those great things you already do. Give yourself credit for the programs you already have in place. Next, you will calculate the baseline of how well you are performing in each area today, and you will start to set your goals. Based on your SWOT analysis, you'll identify some potential gaps that you know that you want to address and actions you could take to achieve your goals. Like any good management system, you will identify your key performance indicators so you can track your progress to your goal and make adjustments in your plan along the way if necessary. Or you might be pleasantly surprised to see that you've already blown past a particular goal and you can adjust it to be more aggressive. Delivery is all about being very clear who is responsible and accountable for delivering the results and implementing the plan. Finally, if sustainability and CSR is built into your management system, then reporting is just an outcome. You may be doing many of these steps today, but just not reporting your progress. The report piece of this is important because that is how you demonstrate to your stakeholders that you heard them, that you're being accountable for taking action, and you're being transparent. These are critical steps to building trust. If CSR is not yet built into your management system, then creating a report can be a good first step to identify the pieces that you need to build into your management system. It can be the spark that ignites your CSR strategy, and you can follow the same steps to build it into your management system. I've shared a lot with you today, and it can be overwhelming if you're new to CSR. So let me share with you a few calming thoughts. First of all, CSR is not prescriptive. The CSR frameworks like GRI, ISO 26000, and AA 1000 are principles-based, not rules-based. You can pull the right pieces from different frameworks, and assurance can be done to any framework. It's about finding what works best for you, and it fits very well into existing management systems. And best of all, there are no nonconformances, just opportunities for improvement. Second, stakeholders want transparency first. Performance will come later. They will give you a lot of credit for identifying the issues that you need to address, making a commitment, and being transparent about what you are doing. Eventually, the market will get more sophisticated and performance will become increasingly important, but today, they primarily want transparency. If you set a goal and show a good faith effort in trying to achieve it, they really don't ding you if you can't meet it. You just adjust your plan and take different actions to try to achieve it. And sometimes that might mean adjusting your goal, and that's okay. Third, speaking of goals, for your first plan, they don't have to be outrageous goals. Set targets that are manageable for your first one. And if you don't reach it, adjust your plan to reach it the next year. There are no CSR police. Fourth, get credit for all the great things you are already doing. Part of the value of having a CSR plan is building in all of those things that you already do for your employees or in the community or in your operations, then organize and communicate it. 5, do what is right for your business. You don't have to track and report on all areas of CSR, only the ones that are most important to your business and your stakeholders. You aren't going to do anything that will threaten your business. 6, look for quick wins and low-hanging fruit in your CSR plan. Those can often fund future programs and initiatives that you would like to do. And 7, although reporting is an annual process, the bulk of the work happens in the first year to make sure that CSR is built into your management system. After that, when that time of year rolls around, you'll have a system in place to already gather customer and employee feedback. Your issues and impacts may change slightly, but I wouldn't expect an overhaul. You will revisit your goals to see if any need adjusting. You will gather updated data for the new time period, and you will communicate your CSR results through a CSR report. As I mentioned at the start of the webinar, in addition to the auditing services with which you may be most familiar, SRI has a wholly owned subsidiary called 3R Sustainability, which provides CSR and built environment consulting. So my role as CSR Solutions Lead is to make sure that we provide a full set of services to our clients with their CSR and sustainability needs, whether it's the upfront strategy and planning work with 3R, or training provided through SRI's training division, or audits, assessments, and assurance on the SRI side to make sure that sustainability is built into your management systems. And depending on a company's CSR goals, when it comes time to implement the plan, we can even audit or assess the management systems or even the supply chain for environmental management, employee health and safety, social accountability, risk management, or even help you design a healthy, high-performing workplace. We are planning some additional webinars in this series, so please let us know if there's a particular topic that you would like us to cover. If you have any questions or would like to talk more about your particular situation, please feel free to reach out to me either by email, phone, or LinkedIn. Thank you for joining us today, and I look forward to speaking with you soon.